The US dollar is trading lower against a basket of major currencies on Tuesday, ahead of a two-day policy meeting of the Federal Reserve. The greenback is weighed down by growing appetite for risk. Stock investors cheered better than expected corporate earnings. Besides, stocks are gaining ground as some US states unveiled plans to reopen businesses. Despite downbeat financial reports from some large US companies, the whole picture does not look as dismal as originally expected. In response, futures on benchmark US stock indexes are rising. Futures on the Dow Jones opened the New York trade with a 1.57% climb, extending early gains. The S&P 500 is also following the uptrend. Investors regained appetite for risk since early Monday as some European countries and US states laid out plans to ease lockdown measures. So Alaska, Oklahoma and Georgia are cautiously restarting domestic businesses. New York governor announced plans for a phased reopening of his state's economy from May 15th. So investors hope that a number of countries will be ready to start the economies in May. Demand for the US dollar is varying as traders are shifting focus towards riskier assets. Since early morning, the US currency slipped across the board. It halted its decline in the early New York trade to trade at 99.65. Global investors are anticipating a policy meeting of the US Fed. Global central banks have already come up with the stimulus measures to shore up economic growth. Now markets are 100% sure that the US regulator will maintain the funds rate unchanged at the zero level. Nevertheless, the risk-on mood remains fragile. Optimism is daunted by the virus-related fears. Meanwhile, a lot of restrictive measures are still in force. The market has not estimated yet the extent of the economic damage, so the fundamental viewpoint, the US dollar has got prospects as a safe haven asset despite the ongoing nosedive. Brent crude prices fell today ahead of the month's end. Traders are selling contracts before the term expires as they do not want the same scenario as last week, when WTI futures slipped into negative values. Now such worries are hardly reasonable. In a couple of days, contracts are due to expire and traders will leave fears behind. The oil market has bleak prospects for recovery in the medium term. At the same time, oil prices cannot fall deeper fundamentally. After careful assessment, it becomes clear that the problem of spare capacity in oil storage facilities is exaggerated. Interestingly, commodity currencies are unaffected by a severe downturn in the global energy market. The Canadian dollar is resilient amid the slump in oil prices. Today, the USD CAD pair shed over 0.5%. The loonie strengthened to the level under 1.40 amid the broad-based weakness of its American rival. Nevertheless, in the evening, both benchmark oil grades rebounded, though it could be hardly termed a steady rally. The oil market could enter a recovery stage in the second half of the year amid an increase in energy demand. Until then, it does not make sense to expect a notable rise in oil quartz. Russia's energy minister Alexander Novak shared his outlook. That's all for today. We keep monitoring the financial market situation. Subscribe to our channel and keep abreast of the latest events. See you tomorrow.